A very good evening to you all, friends. I'm Sanjeev Singhal, Central Council member and Chairman of Auditing and Assurance Standard Board. On behalf of the entire board, I wish you all a very happy new year to you and your families, wishing that this new year brings knowledge, prosperity, and all the good things in life that you wish for yourself. We are here on the 148th program of AASB for this council year. So it's less than 11 months have been completed, 147 programs we have been able to do on very broad spectrum of topics. And now we are into specialized topics, talking about audit of IT sector. More than 110,000 members have attended these programs so far. And I have the pleasure in introducing some of the stalwarts of the profession for today's program. CA Kapil Kedar, whom I had the opportunity of working with me, a hardcore auditor. Then CA Pankaj Aneja, again a very specialist auditor. And of course, our speaker for the day, CA Raghav Singhal. Actually, all three have been speakers. So this time we chose to give the moderator role to two of them and the speaker role to one of them. Friends, audit is at a very important juncture. The expectation of the regulators have increased multifold. The complexities of the industries have increased. And when we talk about technology, technology is there to solve the complex problems. But in the technology sector also, there are very complex issues that the auditors needs to focus on. So today, in the course of next 2 hours, three of these young and bright chartered accountant members of our profession will deal into the nitty-gritties while doing audit of this very, very niche sector, which is one of the backbone of Indian economy. So with this, may I hand over to two of our moderators, Kapil Kedar and Pankaj Aneja, to take up their roles, introduce the topic, introduce the speaker, and then invite Raghavji for his guest lecture. And then it will be followed up by Q&A. Please feel free to send your questions in the chat box, and our moderators will screen those questions to ensure that duplicacy is not there and raise it to our guest speaker. Thank you, and over to you, Kapil and Pankaj.
Thank you, Sanjeevji, for this words. And we start up with the things, ladies and gentlemen, esteemed guests and participants. Good evening and welcome to this 148th webinar organized by the Auditing and Assurance Standard Board of ICI on key considerations in the audit of the IT sector. I first of all make a thanks to our and welcome Shri Sanjeev Singhal he Central Council member and Chairman Accounting Standard and Standard
Auditing and Assurance
Standard Board, Auditing and Assurance Standard Board. Plus, I will also welcome CA Vishal Doshi Vice Chairman of Auditing and Assurance Standard Board of ICI. And he's a vice chairman there. And I'm honored to be your moderator for this insightful discussions where we will delve into the critical aspects of auditing within the dynamic and rapidly evolving landscape of information technology. In today's digital age, the IT sector plays a pivotal role in shaping the global business environment. As technology continues to advance, so do the complexities and challenges faced by auditors tasked with ensuring the integrity, security, and compliance of IT system. These words are just said by our chairman also on this particular aspect. Sanjeev ji has very well elaborated all these things. However, this webinar aims to shed light on the key considerations that auditors must bear in mind when navigating these intricate landscape. Our honorable speaker, CA Raghav Singhal, brings a wealth of experience and knowledge in IT auditing, and he is here to share his insights, best practices, and strategies with you. Throughout our discussions today, we will explore the latest trend, emerging risk, and innovative approaches in the audit of the IT sector. We understand that the audit landscape is constantly evolving, influenced by regulatory challenges, technological advancements, and the ever-growing importance of data security. Therefore, it is crucial for the auditors to stay informed and adaptable. Our goal is to equip you with the knowledge and tools necessary to navigate these challenges effectively. As we embark on this journey together, I encourage all participants to actively engage with the speaker. Feel free to submit your questions, write to us, and share your experience in the chat. This webinar is not just a platform for learning, but also an opportunity for collaboration. Without further ado, let's commence our exploration into the key considerations in the audit of the IT sectors. I now ask my moderator friend CA Kapil to give a brief introduction about the speaker, Mr. Raghav Bansal.
Thanks, Pankaj, for this introduction, and I'm honored and I thank Shri Sanjeev Kumar Singhal, Chairman, and Shri Vishal Doshi ji, Vice Chairman of Auditing and Assurance Standards Board of ICI, for giving me this opportunity to be part of to act as a moderator for this today's very important topic on key considerations in the audit of IT sector. This is 148th webinar of AASB, and today's presenter is CA Raghav Singhal. And just to give a brief introduction about Raghav, so Raghav Singhal is chartered accountant with 10 years of experience. He has been conducting statutory audits and providing technical accounting solutions under Indian GAAP, Ind AS, US GAAP. He is associated presently with Perian Services, a leading global assurance and advisory firm. He is leading the New York, DC, and Wisconsin offices. He has spent 4 years approximately with the global accounting firm KPMG and 4 years with Grant Thornton. In addition to statutory audits, Raghav has his experience in drafting complex accounting policies, conducting limited reviews, agreed upon procedures, ICFR certifications, etc. And during his tenure with Grant Thornton, he was single-handedly responsible for leading multiple listed and private limited engagements and was also involved in drafting options and opinions on clients-related complex accounting problems in revenue recognition, leases, classification between debt equity, instruments, modification of ESOPs, agreements, etc. He has advised multiple clients on operating effectiveness of ICFR and various methods of improvement therein. And his domain expertise ranges from multiple industries, right from automotive, hospitality, IT sector, FMCG, retail, manufacturing, and others. So without any further delay, I'll now request Raghav to start his session. Today's session, the important one on key considerations in audit of IT sector. And I once again thanks Sanjeev ji, Vishal ji, and my fellow moderator Pankaj and Raghav for being part of this session. Over to you, Raghav. Thank you.
Sure, sir. Thank you so much, Kapil sir, Pankaj ji, and Sanjeev sir, for giving me this opportunity to present on this very, very important topic, key considerations in audit of IT sector. Anil ji, can you let me know if the presentation is fine and my audio is clear?
Yes, Raghav.
Perfect. Thank you. So without further delay, let's start. Friends, a very happy new year to you. And we are starting with this topic, key considerations in audit of IT sector. The presentation that I'm going to take you, everyone through it would consist of the first part being, establishing the importance of the sector, establishing why, from an audit perspective, this sector becomes extremely, extremely critical. And then we will move on to audit considerations, which are specific to the IT sector. So starting with the evolution of the Indian IT sector, like how did this sector evolve? Why has it become so important that today almost all companies somewhere or the other have a connection with the information technology? So before 1995, the sector came into existence somewhere around 1974 when the first services contract was signed with TCS. Pre 1995, the main part of the sector was that US companies or other global companies were outsourcing their work to India. Why? Because there was a low cost and skilled talent pool in India. So that was only first the outsourcing part. In the next 10 to 15 years, up to 2005, there we saw a significant increase in the research and development cost in the sector. India became a product development destination. The indigenous firms, they grew multifolds in their sizes and scopes of services. And a lot of Western countries came in and set up their bases in India. From 2015 to 2005 to 2016, the next 10 years, India became literally the hub of IT. The firms in India became multinational companies. So earlier, not just the US or the other global companies were setting up their bases. From this era 5 to 15, 16, the Indian companies started setting up their bases across the globe. From an enterprise servicing, we became an enterprise solutioning sector. So we started providing solutions instead of just servicing or providing outsourced work. And as on date, from 2017 onwards, the sector stands at US dollars 245 billion. And that's a huge, huge number. It employs somewhere around 5.4 million people with almost 3 lakh hiring done in FY23. So that shows the importance of this sector. India itself ranks third among the startup ecosystems, out of which 68,000 startups have been tech startups. And it is expected that by 2025, the IT sector is going to be about US dollars 350 billion. And with newer technologies coming in like AI, machine learning, and Internet of Thinking, this sector is going to literally go multi-bounds from here. Now, a small executive summary and importance of the IT sector as we spoke. It contributes, like Sanjeev sir also said, it contributes about 7.4% of the India's GDP by FY22. And it is expected that this one single sector is going to contribute about 10% to India's GDP by 2025, which is a huge contribution. So one single sector contributing 1/10 to the economy is a great achievement. There are many strong growth opportunities in this sector. Like we spoke about, that it is going to hit about US dollar 350 billion by 2025. From FY22 to 23, this sector has shown a resilience post-COVID and grown by a 15.5% year-on-year growth. So it is not stopping. This sector is not stopping its growth. It is just increasing with newer technologies coming in. It is expected to rise. The level of exports this sector has shown is tremendous. So the exports from Indian services software, the Indian IT industry stood at 254 billion in FY22. The business process management sector in India currently employs more than 14 lakh people. From an investments point of view as well, the IT sector is a very, very lucrative sector, both internally as well as when we talk about investments from overseas. So the foreign direct investments, the FDI inflows, were worth $96 billion between 2000 and 2023. So between 23 years, $96 billion were flown into this sector. And the computer, software, and hardware make 15% of the cumulative India FDI inflows. So why I'm talking about all these numbers is to establish a criticality of this sector. It is not just one of these sectors. It is a very, very important sector in today's day and age. Now, when we talk about India's IT sector, it is a very broad term. It has many verticals to it. The 4 main verticals are the IT services, which is the main vertical. 81% of this sector's revenue is export. Like I spoke in the previous slide, that a lot of exports are happening. So 81% of revenue of the IT services come by exporting the IT services. The BFSI sector continues to be the key vertical for this IT industry. We all know this BFI sectors: banking, financial services, and the insurance sector. It's almost all companies in the banking space, be it HDFC Bank, ICICI Bank, somewhere or the other, they are related to the IT as well. The business process management vertical, again, about 80%, 87% of this vertical comes from the export market, the revenue of this vertical. The third vertical being the software product and engineering services. Again, 84% of the revenue of this vertical comes from export services, and then of course the hardware sector. Now, what's important is that the almost all sectors today are integrated with IT. You see a plethora of companies emerging in the fintech space, in the health tech space, in the ed tech space, and so on. And only because there's a low capital infusion involved, right? So, be it all your Paytms, be it all your electronic health record companies, be it all your physics wala, and in today's day and age, all these companies, all these organizations, somewhere or the other, are IT oriented organizations. Now, when we've established the criticality and the importance of the IT sector, it is important to know that frauds also follow this sector. It's not that this sector is free of frauds. So, being an established sector, the IT industry has seen numerous frauds involving senior management in manipulation of their books of accounts. A lot of frauds have been done through related party transactions in these sectors because a lot of small scale and even big scale companies have numerous transactions with their related parties. Some examples that have been in the past is WorldCom accounting scandal that happened in 2002. An IT and telecom company, the company inflated its profits by over $11 billion through improper accounting entries and overstatement of assets. And WorldCom filed for bankruptcy, and several top executives were prosecuted. Satyam case, as we all know, it's an infamous IT scam. Ramalinga Raju admitted to inflating again the company's profits and assets over several years. Toshiba accounting scandal, which happened in 2015, Japan, again overstating the profits by nearly $2 billion over several years. This scandal involved accounting manipulations, and again the top executives were asked to resign. And then the Siemens bribery scandal, allegations of widespread bribery and corruption. The company made many huge illegal payments to win contracts and gain favorable treatments. So when these frauds occur, they do not only bring disgrace only to the company, it brings disgrace to individual auditors who are auditing these companies, the auditing firm. In fact, if the companies are large, it brings a huge disgrace to the country as a whole as well. And to the government, of course, from an outsider's perspective. So if somebody sitting outside, they would not want to invest in India's IT sector because there are a lot of frauds happening. And who is responsible actually to bring these frauds or to correct these overstatement of profits and improper accounting entries? We auditors, because we are the people who are actually responsible for this. Now, what are some recent auditor flags in the news? I'm sure that all of us have gone through somewhere or the other these articles in somewhere or the other newspapers. So Deloitte, the auditor, flagged uncertainty in Dunzo. Dunzo, everybody knows, it's a platform where basically delivery of goods from one place to the other. So Deloitte flagged uncertainty around the latter status as a going concern. Correct. And why? Because the liabilities were exceeding the assets by around 325 crores. So as auditors, we could easily skip it, right? And this would then probably, let's say that if tomorrow Dunzo gets listed and somebody invests in them, then and the firm, and the company closes down. So whose responsibility it is to flag? It is the auditor's responsibility to flag this. Similarly, we saw a recent auditor flag in Pristine Care. KPMG flagged some of the company's processes which could result in overstatement or understatement of recognized revenue. So Pristine did not have internal controls actually to accurately determine prices charged to hospitals or patients. So there were a lag in the internal controls of the entity which KPMG actually flagged out publicly. So as auditors, we are not only responsible again only for doing certain substantive procedures. It is very, very important that the control environment has to be proper and to be tested. Again, a very famous case of Byju's. Deloitte resigned because Byju's was not filing its financial statements for the year 2022. Deloitte said it did not receive any necessary documents after writing several letters to the board, and they eventually resigned. Correct. So these are some recent auditor flags in the IT industries. Now, as auditors, we have to be very, very aware of the common malpractices that are happening. The most common malpractice observed in the IT industry is reporting of inflated figures in revenue done by fictitious income. What are certain common other malpractices? This industry as a whole is very employee heavy. You know, the asset heavy, the property, plant, and equipment is not that much as the employees are there. So people are assets in these kind of industries. Headcount is the plant capacity. And it also has the concept of bench appointment, hire more than required, because there are projects that are ongoing. So if 10% of the workforce fall ill, then somebody has to come and fill in. So a major area of a malpractice is employee compensation. Then a lot of startups are coming in these industries which are enjoying tax holidays, concessions, and privileges. Auditors have to be careful while dealing with the computation of these the tax in this period. Like we mentioned in the earlier slides, exports is a major factor of this industry, right? So exports are very difficult to value since they're intangibles. Like if you're exporting software services, so auditor has to be mindful of all the regulations surrounding the export of services, the export of hardware, the impex rules, the soft tax forms that the company prepares. And then, of course, there is a very common factor of related party transactions in this kind of industry. So self-reported metrics like billing rates to related parties are often skipped by auditors, whether they're at arm's length price or not. So moving on, what are the key audit considerations, right? We've dealt with the common areas the entity does, malpractices. Now, what are some other areas where we can actually see a scope of misstatement in this industry? Like I mentioned, transaction with related party not accurate or not recorded at arm's length. Auditor must check with the transfer pricing professional to ensure that all the related party transactions are at arm's length price. This industry has a very complex revenue recognition. There are multiple models of recognizing revenue. It is very important for the auditor to understand the revenue model of the entity. Revenue in IT industry is always a high risk area. The foreign exchange exposure, because of the exports, there is a lot of foreign exchange exposure in this industry. Tech-based entities have global operations, which increases the risk. So auditors must be mindful of this area as well. The ITGCs, we cannot talk about the IT sector without the importance of ITGCs and ITACs as well. So ITGCs are information technology general controls and information technology application controls. They are most crucial from an auditor's perspective to form an opinion on the financial statements. Going concern. Now, tech startups have multiple new range of business models. It becomes imperative for an auditor to assess the going concern for these kind of entities, because the technology is changing so fast, the models are changing so fast, there's a lot of competition coming in. So auditors should carefully check whether the going concern assumption is appropriate or not. Intangibles valuation. When we talk about IT sector, specifically the software sector specific, there is a lot of intangible capitalization, be it acquired software or be it in-house developed software. So the auditor has to be careful of that, this area as well, that whether the capitalization done by the entity is actually permitted as per the standard. And we all know a very important area, ESOPs in this kind of entities in this sector. The share-based payments is extremely important to this sector. There's so much of iteration between companies, between firms in this sector, that most of the firms and the companies are bringing out these kind of models to retain and attract talent. Now, when we move on to the audit part, we've set a context of the importance of this sector. We've known a couple of areas where the auditor has to place reliance, has to be extremely careful in doing their audit procedures. Now, when we move on to the planning of this sector, what is the most important thing in planning of an audit? It is actually understanding entity and its environment. This is a very, generally I see young chartered accountants, who are just starting out in the profession, not placing reliance on, this part, and just moving forward, just doing the tick in the box. But honestly, this is one of the most important, I would say, in an audit assignment, to understand the entity and its environment. So how do you do it in an IT industry? First, understand the relevant industry, right? So the IT, like we mentioned, that the IT sector is actually a combination of many verticals. So we need to understand what vertical are we auditing. Are we auditing the IT services vertical? Are we auditing the business process management vertical? Are we auditing the software product vertical? Or are we auditing the e-commerce sector? Because the accounting changes, the laws change, and a lot of other things are industry specific in this case. We need to understand the regulatory and other factors, right? So the IT sector in India is governed, by primarily the Indian Copyright Act, the FEMA Act, the IT Act of 2000. We as auditors should know, at least we are not experts. We understand that because of our long nature of doing audit, we're not experts in legal provisions. However, we need to understand the main factors while doing or while delving in auditing these industries. Like, so for example, IT Act, has provisions with respect to digital signatures, and compensation for unauthorized access and disclosures. It becomes really important because in case the company is not complying with the legal requirements, it can actually entail a lot of penalties on the company. From an auditor's perspective, it is very important to know that what could be the possible outflows for an entity. In FEMA, provisions related to let's say realization and repatriation of forex and FDIs, external commercial borrowings. A lot of companies, IT companies these days, are borrowing externally through ECBs, and the forms that are necessary to comply, to file, with foreign remittances. So it is very important for an auditor to understand the regulations around the company that they are auditing. The geographies in which the entity is operating. A lot of multinational tech entities have set up global capacity centers in India, and vice versa. A lot of Indian companies have a lot of foreign subsidiaries. Specifically, all the big to middle companies have somewhere or the other global presence. So it becomes extremely important for an auditor to understand what geographies are the companies operating. Then the entities selection and application of accounting policies, including changes. Tech-based entities are operating on new business models. They keep on changing their business requirements. They keep on doing their acquisitions, this, that, etc. So it becomes very important for an auditor to understand the accounting policies that the entities are following. Entities control environment. Now, I mentioned it briefly earlier. So ITGCs, ITACs, and other non-IT controls, financial controls, are very important to understand. The usage of service organizations for any key process. So a lot of IT companies, what they are doing these days is they're outsourcing their payroll process. They're outsourcing their, one of their main business cycle. They're outsourcing to other service organizations. So it becomes very important for the auditor to obtain the SOC reports, the audited reports of those outsourced entities, the controls, the control audit reports for which have been implemented in those entities, from which the main entity is obtaining the data from those entities. So it becomes very important there. Understanding the nature of transaction with related parties. So we mentioned that there are a lot of related parties in this sector. It is very important for the auditor to understand what are the nature of transactions with those related parties. Understanding the competition the entity is facing in the market, as the IT industry is growing at a significant pace, which poses a challenge to the entity's ability as a going concern. So a lot of competitions are coming in to each and every kind of company in this space. And for an entity to withstand all the competition, it is very important for an auditor to understand the competition and then assess the going concern assessment based on the competition. The ownership and governance structure, like I mentioned, there are a lot of share-based payments, a lot of convertible debts in this sector. So the ownership and the governance structure of this entity is also very important. How is it structured? How is it financed? Understanding the risk associated with the business, the customer base of the entity, the type of arrangement with its customers, the terms of contracts which are entered by the entity and the customers. So these are certain important aspects that the auditor should deal with while they are understanding the entity and its environment. Now, when I move on to the materiality considerations for IT industries, right? So materiality from a perspective of an auditor is actually used to determine the nature, timing, and extent of our evidence, right? It is used in sampling, it is used in actually, earmarking what is a important area to audit, what is scope, what areas are in the scope, what areas are out of scope. So the auditor's determination of materiality is a matter of professional judgment, and it is affected by the auditor's perception. It is generally actually based on the users of the financial statements, right? So, for example, if I am doing, or if we are doing an audit of, let's say, a startup entity, right, and where the users and it has taken a lot of borrowings. So the main users for that company will be lenders, right? So it is important for the auditor to know what metric is important for those users based on which they will conduct their audits. So the possible benchmarks generally, which we use in an IT industry, are the profits before taxes and the total revenue. The approximate percentage range for an overall financial statement materiality for profit before taxes is somewhere around 5 to 10%. Of course, it depends on the the methodology of the firm that you are associated with, or if you are practicing chartered accountant, it depends on the methodology that you have incorporated to do the audits of your clients, and then the total revenue, right? So the generally industry accepted percentage for the total revenue is 0.25 to 3%. Now, when I talk about newly set up entities where the revenue is minimal because they are still in the starting phase of their existence, maybe 2 years, 3 years, the revenue is very, very less. What is actually that we can take as a benchmark for materiality is total expenditure, and it can be considered as an appropriate benchmark since these are the two top lines in the financial statements. A lot of entities in the IT industry are also operating on a cost plus markup model, right? So basically, if they are, let's say, servicing their related parties overseas, the way they bill their related parties is that they just put a percentage of markup over the cost, and that's how they gain revenue. So in that case, revenue is not that important. What is more important is the cost. So the auditor should ensure that the benchmark is cost, not revenue. And of course, these are the percentages for an overall financial statement materiality level, basis which we will take out our performance materiality for scoping in the auditing areas, and basis which we will take out our trivials. So moving on to some other important planning and risk assessment procedures, right? It is very important in this kind of industry to do a background verification of the promoter group, TCWG, in addition to the KYC norms. Identification and evaluation of independence. Now, it might happen that you are auditing, and because the IT industry is so far spread, it might happen that you are auditing a subsidiary in India, and a co-subsidiary is being audited by your member firm in some other country, or maybe that member firm is providing some non-attestation services to that company. So it becomes extremely important for the auditor to understand all aspects of independence. It's not just that the audit team does not have, maybe the stocks of the company that they're auditing. The independence is not just limited to that. The independence contains a lot. It's a very wide term, and it contains a lot of aspects. In case that you get an independence issue, please, it is very important to assess the independence through the ISBA guidance and the ICAI guidance that is there on independence. So ISBA has issued an international code of ethics based on which the auditor can actually evaluate whether they are independent or not. Similarly, there is an ICAI code of ethics. Now, a very important factor is fraud risk assessments, right? When our auditing standards tell us to, actually assume fraud risk in two things, which is, management override of controls and revenue recognition. So from a fraud risk perspective, what is the fraud triangle? Why is it that management indulges into fraud? So there are three main things in the fraud triangle. One is if there is an incentive of pressure. The other is if the management sees an opportunity, or the third is the rationalization. And we'll talk through each of the points because it is very critical. Incentive of pressure to commit fraudulent financial reporting may exist when management is under the pressure to achieve an expected target of financial outcome. So, for example, let's say that if the management is under a pressure to increase, let's say, stock prices in a particular quarter, or we've seen that a lot of senior management people are given performance-based bonuses in this sector. So to increase those kind of numbers, to gain more bonuses, there is an incentive to the senior management to manipulate the numbers, manipulate the books of accounts. In the banking financial sector and the insurance space, the BFSI space, there may be a pressure on the management to meet lending targets. So for example, a particular bank has to show a particular lending target so they can create fictitious loans. So these are some examples of certain incentives or pressure in the IT industry. When we talk about opportunity, the ability to carry out fraud, right? So what is the opportunity? When the management actually believes that, okay, now this is the opportunity, let's do a fraud. When the particular individual believes that the internal control system is overridden or can be overridden, or that particular person can bypass the procedures or the process set in the company. So for example, let's say that if a particular employee or a particular person from the management has an access to the employee system, right? So they can easily create fictitious employees in the system. They can easily create ghost employees and show fictitious payroll outflows and take the money home. So there is a lot of cases that we've seen in the past that such things have come out. Fake invoices is another opportunity when the senior management has access to the invoicing system or the entire ERP system, which is actually generating invoices. So they can create fake invoices. Embezzlement is another example of the opportunity. Now, what is rationalization? Rationalization actually means that the individuals who have committed fraud, they actually have a reason to believe that the fraud is correct, that they should have done it. So audit, this is I would say personally, this is a very important point because this is not right in front of you, right? This factor we as auditors have to judge through, our interaction with the senior management, the inquiries that we make with the senior management, that who is acting unethically, who has the grudge against that company. So maybe, for example, if you come across a disgruntled person from management, let's say, who believes that he's underpaid. He may not be. He may be paid at par with the industry. However, he personally believes that he's underpaid according to his abilities. So that person is somebody who can actually commit a fraud in the company. So from an auditor's perspective, it is very important to keep your eye open to such kind of employees, who have the ability to rationalize or justify their dishonest intentions. So what is rationalization? This pertains to individuals who may be able to rationalize committing a fraudulent act. So some individuals possess an attitude, character, or a set of ethical values. So it may be that the entire tone in the organization is not, set well. The entire tone in the organization is unethical. And we know a couple of companies in the space who are operating like that. Moving on, it is very important for an auditor to review the various minutes of the meetings, like internal audit or the company secretary minutes, or the financial due diligence done for investors. So in the IT industry, there are a lot of takeovers, there are a lot of mergers, there are a lot of acquisitions. A lot of due diligence reports are there available with the companies or firms who have done both from the buy side due diligence as well as from the sell side due diligence. So it's very important to read from an auditor's perspective those reports, because something that may not be there or may not be disclosed to you or may not even be there in the internal auditor report could actually potentially be there in the financial due diligence report, right? Similarly, the financial projections, the valuations, any SOC reports like we spoke earlier, the service organization control report. for entities using service organizations is also very important from an auditor's perspective. And of course, the measurement and review of entities' financial performance. Right. Now we've spoken about some fraud risks. So what are the responses to fraud risks? So in IT industries, there is always a significant risk of overstatement of revenue due to fraud, and that is also to be taken as a presumed fraud risk. So when I say presumed fraud risk, it means that when we are doing our risk assessment procedures, when we are setting the risk of material misstatement for various audit areas, irrespective of how the inherent risk is, irrespective of what the control risk is, in revenue recognition, the fraud risk always has to be presumed, right? Evaluate entities' ethical code of conduct policies and procedures and the management's behavior. So it is very important that when you are actually trying to understand the fraud risk, it is very important to gauge or gauge the entity's ethical and code of conduct policy. So whether is there a ethical code of conduct, is there an employee policy in place, is there the admin policy in place, etc. So it becomes very important from the auditor's perspective to understand these things, to understand the management's behavior. Incorporate element of surprise in audit. So this is a very important factor to actually, in response to check fraud risks. So an auditor can actually do a surprise audit check. For example, let's say that a spot check on data security. So if you are auditing an IT company, you can just one fine day get up and the team can actually do a spot check on data security. You can tell the management, okay, we want to check the data security in the organization, right? Or you may, internally discuss when you're planning the audit procedures that, okay, we want on this day, we want to have sudden inquiries with employees at various levels to understand what's going on in the organization, which may not be disclosed to you from the people sharing the audit data or the management. So have sudden inquiries with employees at various levels. So it's important to do and you can draft your own, you can come up with your own, surprise audit procedures. So it becomes very important to incorporate the element of surprise in audit. Be alert throughout audit. So I tell a lot of people, working with me that each and everything should be seen from an auditor's lens. There should not be nothing that should escape the auditor's lens. You have to be alert in each and every action of the company or the management. I'm not saying that, stuck ki nazron se dekho. No, but I'm saying be alert on each and everything. Perform a detailed review of the entity's quarter end or year end adjusting entries. Now, in this particular industry, the IT industry, my personal experience has been that a lot of misstatements are, as auditors, we come across through year-end entries, like overstating balances. There could be issues in the cutoffs of these companies. So the next year's early revenue has been booked in the current year, or the current year revenue, towards the end of year end is booked in the early next year. So that is something that the auditor needs to perform a detailed review, and it could also be done on purpose, as we saw that it could be an incentive or a pressure or an opportunity. I in one of the companies, I personally saw a misstatement which was through an year-end entity which was writing back an important warranty provision, right? And we questioned the company on that why have you written back, and they came with all sorts of their explanations that no, because it's not required. You see, in the last 6 months, 7 months, there has been nothing, that has been returned, this, that, etc. We kept on questioning, we kept on delving deeper into, the reasonings that the management provided. And in the end, we, reversed that entry. And that was a huge number. So all these things have to be actually, taken care of from, in a detailed manner. Look for any unusual big payments made to professional consultants, made to any legal, vendors, legal parties. Again, in one of the audits that I was doing in this sector, suddenly, on scrutiny of the trial balance, I realized that the legal expenses has gone up. Generally, the overall balance of the legal expense was actually below the performance materiality. So if I was not alert enough, then the team could have, skipped it because it was not material from a materiality standpoint. However, when we saw that the significant, in terms of percentage, there was a significant jump in the legal expenses, and we actually inquired we sent the confirmation to the legal, the legal counsel, and we actually realized that there was a litigation going on the company. So it becomes very important for an auditor to, keep their eyes open on such unusual payments or big payments, and then inquire in depth with the management. Don't, just settle for whatever the management says. Whatever the management is saying, just, make a rule of it that everything the management saying has to be tested. You cannot rely on the management. Now, when we've done the planning, some important risks which are specific in the IT companies and the auditor's responses. So if I talk about the critical area revenue, the relevant assertions are existence and valuation, because there are a lot of revenue models that are there prevalent in this industry. So revenue could be overstated or understated is the risk by management to meet investor expectations, or for that matter, any reason, right? What could be the auditor's response? The auditor should understand all the revenue models and streams, whether it's on a period basis, whether it's a per user basis. A lot of software companies are actually, signing contracts on per user basis, or maybe a quarter basis, or even multi-year, big, long multi-year contracts. So it becomes very important for the auditor to understand these models, because based on these models, the revenue recognition changes, the rev rec changes. Review contracts with all major customers with all important contract terms. Identify all performance obligations. For example, when we talk about a niche area under the IT industry is SaaS companies, software as a service companies. Services are bundled with implementation services, upgradation services, updation services, etc. And sometimes they are capable of being distinct. So it becomes very important for the auditor to understand the performance obligations that the companies are doing. Another critical area in this sector is employee comp, payroll, HR, employee compensation. The relevant assertions are existence and valuations. Certain risks that are actually important in this kind of industry is that the increments have to be given to employee, may be unauthorized. So you will see that when you're auditing the IT company, there are a lot of increments. Sometimes there are increments twice or thrice in a year, right? Quarterly increments, monthly increments. So a lot of increments are there during the year. So the auditor has to be sure that all these increments are actually approved by the board of directors. There's nothing that is inapproved, or the HR or the talent team is giving on its own. The employees may take leaves without proper approval. Because of so many employees being there in this in these companies, there it's very hard to track for an entity the leaves, etc. So a proper system has to be in place to track the leaves. The controls over attendance should be there through daily attendance. On a sample check basis, the auditor should actually check the timesheets as well. An employee daily timesheet should be there in place. In the absence of, so another risk is in the absence of restriction to salary structure, the compensation structure can be modified. So there has to be a right access for the modification of the salary structure only with the authorized people. It's not that in the system anybody can go and change the employee compensation. And due to the high iteration rate prevalent in this industry, the company might be sending incorrect data for actuarial valuation. Because there's so many employees, so many iteration, joining, leaving, this, that, etc. From an auditor's perspective, it actually becomes really important to verify the data that is being sent to the actuary as well. Moving on to expenses, what are the risks that are actually important from an expense standpoint, right? Procurement at higher cost may lead to excessive cost incurred on operational expenditure. So when these companies are procuring assets, when these companies are procuring a lot of other items, it could be at a higher cost that may lead to excessive cost. So there has to be a proper system of quotations within the within the entity, that the quotations is actually received, then compared, and then a final call has been taken, and then the order is placed. There have been many times where I personally have seen unauthorized and excess claims in absence of any defined expense reimbursement policies. And because again, the number of employees being so high, this cost becomes really high for an entity. So there has to be a proper process related to the employee reimbursements. The inaccurate rent payments, a very important factor of this industry is leases, right? So the entities are actually taking their offices on leases instead of expending, or instead of heavily spending on buying infrastructure, because they generally don't want to spend too much on capex. So inaccurate or unauthorized rent payments is another risk. A proper recording and treatment of rent should be there as per the applicable standard. There, the entity, the person dealing with this area should be qualified enough to be able to compute the right of use of asset, or the straight lining, as the case may be, properly. The necessary approvals, then there's a lot of travel in this industry, as we see that, specifically the senior management keeps on traveling. So necessary approvals for travel are not available generally. Auditor should ensure again that there is a proper travel policy of the company, and whatever travel reimbursements or travel bookings are being done by the travel desk are actually being done in accordance with the company's travel policy. Now moving on to period end processes. So this again is a very, very important critical time of the audit, that to evaluate the period end entries, evaluate the period end processes that the entity has. What are the common risks is that the foreign currency balance may not be accurately reinstated in INR. So a lot of foreign subsidiaries of these IT companies send in their financial statements, but maybe the person dealing or responsible for drafting the financial statements on the client side is not qualified enough. So the auditor should ensure that the reinstatement of foreign currency balance is appropriate. Bank balances, the BRS, the proper system of bank reconciliation statements should be in place. Write-offs are not appropriately computed. So the period end write-offs, what are happening is, let's say that the debt write-offs are happening, or maybe the receivables are written back. So that is not happening as per the proper authorization. So those controls should be there in the IT industry. Now, moving on to a very critical other area, which is the intangible assets capitalization. So, as we all know, this IT industry has a lot of intangible assets in their books of accounts. Goodwill is there, patents, copyrights are there, there's indigenously developed software systems are there. So, one of the major risks in the IT industry is overcapitalization or undercapitalization of software development costs, or even maybe sometimes expensing of those costs in the P&L statement, or vice versa, that the costs that actually should be expensed off are being capitalized. So auditor should ensure that the entity has competent and skillful people to correctly compute and capitalize software development costs as per the relevant standard. So that again becomes very critical from an IT industry perspective. Now, some other key risks that we see in the generally in the IT industry. One is the talent risk. So due to huge demand of the talent globally and iteration, there is a lot of movement, like we've spoken, amongst the talent pool. Auditor must obtain an understanding from the management. How are they planning to mitigate this risk? How are they planning to actually retain their employees? How are they planning to actually invest in their employees? How are they actually planning to hire more employees and expand their business? And how are they actually doing all these things to mitigate and prove to the auditors that the entities has the ability to continue as a going concern, right? The business model challenges in these in the IT industry, there are rapidly evolving technological changes. Every 1 year, every 2 year, the technology is changing. The entire IT infrastructure is changing. 4G, 5G, there's that. There are a lot of improvements coming in every year. So how do the organizations actually ensure that there is no threat of technological obsolescence? So rapidly evolving technologies are changing technology. consumption patterns, creating new class of buyers, giving rise to new business models, and therefore new kinds of competition. This actually poses a threat of obsolete technology and therefore impacts the going concern of the entity. So the auditor should be, willing to invest some time in understanding what are the future plans of the entity, how do they plan to tackle this challenge. The currency volatility. Uh, so as we've spoken that there is a lot of foreign currency exposure in this kind of industry. So there is a lot of currency volatility as well. Uh, so volatility in currency movements results in transactions and translation exposure. Auditors should evaluate the impact of such foreign exchange volatility in accordance with the standards. They should also actually, inquire with the entity how are they planning to, hedge their risks against currency volatility, and then data integrity, which is the most important thing in the IT industry, because they're dealing with so many data. So even any kind of entity, if you see, which are directly linked with, let's assume Paytm, for example, even though it is a fintech, but it is a tech company, it is again a technology company. They have a lot of data. They have credit card information. Similarly, if you see some health tech startup, they have a lot of health information of the people of this country. So how are they actually maintaining the data integrity? So data is the biggest asset for the IT industry, right? They manage and maintain data in bulk, the integrity of which is of a major concern. As auditor, we should test controls relevant to the data integrity which the management has in place. So this also becomes a very important key risk and the risk response that we need to do in this kind of industry. Now moving on to the ITGCs, like I mentioned earlier, that these entities have a lot of data. So when we talk about control testing in audit, the how do we do control testing? So the controls are at a various levels, right? So there are financial controls, and there are automated controls. Within the automated controls, there are ITGCs and IT application controls. The auditors should ensure to engage the IT specialists to actually audit the controls in the system, both from ITGC perspective as well as ITAC perspective. They are essential components of an organization's internal control framework, and ITGCs help ensure integrity and confidentiality of the data and effectiveness of the information systems. So for an audit of an IT company, the auditor should perform testing of ITGCs, since IT controls are most relevant to such entities, as the major risk is of data security and integrity. So some common controls related to which are the ITGCs, IT general controls, is that we must ensure that the user access is provided with appropriate approval. So it's not necessary that all users have access to all systems in the company. Employees should only be restricted to their employee portals. They should not be given access to financial portals, talent portals, admin portals, or any other kind of stuff. User access for terminated employees is removed in a timely manner. Access to the system is restricted through strict passwords. So there is a strong password environment, there is a strong firewall environment, there is a strong resistance to unauthorized access. Unauthorized changes should be restricted to the application, operating system, database, and network. So it's not that anybody in the organization or even the senior management should be allowed to make changes in any kind of application or the way a system is operating. Let's say maybe the depreciation is being computed at a particular percentage. So maybe tomorrow somebody, if he has an unauthorized access, can change the rate of, let's say, building depreciation, or let's say the laptop depreciation. So that could have a catastrophic impact on the financial statement numbers. Changes are tested sufficiently prior to implementation in the system. So when there are a lot of changes, we see a lot of changes in this IT industry, which are happening in different systems, in the ERP systems, etc. So it should be tested sufficiently. It's not that once the changes are there, just implement them without any proper training, without any proper testing, because then it will fail. The entire system, the entire ERP system will fail. System backups have to be taken on a regular basis and tested for successful restoration. this also becomes very important from an auditor's perspective, because in case some data is lost, then as auditors, how will you check? You can actually ask the entity to give you the backup of those audit trails that we as auditors may be looking. External access to the system is completely restricted, so there should be no allowance of any external access in any kind of system of the entity. And the data center or the data server room, or whatever you may call it, is designed to prevent damage due to external factors. So just some of the very limited, there are many other ITGCs, but what I've tried to do is put very limited things which are very important from an auditor's perspective. So an auditor should test the ITGC to ensure that they're designed and operating effectively, since these are of utmost relevance to the functioning of an IT industry company. Now, we have talked about the importance of the IT sector. We've spoken about key risks in the IT sector. We've spoken about the fraud risk. We've spoken about certain risk responses. We've also spoken about some ITGCs, why are they important, and what kind of ITGCs are there in the IT industry. Now, moving on to the financial statement part of things. So typically, what would you see in an IT industry or an IT company? Of course, again, there are a lot of other things that you might see, but these are specific things that you will see in IT industry only, right? So when we talk about revenues, there could be revenue from consulting, right? So the business, technology, or processes consulting could be a major source of revenue. The technology services revenue could be there in the financial statements, which could include business application services, IT services, engineering services revenue. The business process outsourcing revenue is another major source of revenue for the IT sector. And then, of course, the products and solutions are there. Cloud-based softwares, cloud-based portal accesses, mobility, and platforms. Various platforms are there. And definitely the hardware part, the products part could be there. When we talk about common costs that are there in the IT industry, the first two, in fact, I would say the major things are: one, software cost, the development part, as well as the research cost, and the payroll expenses for high skilled workforce, because in IT sector you need skilled workforce. The other common cost components that you could see in IT industries is customer support expenses. So when IT companies actually sell their software, then they also sell along with it their customer support expenses, or maybe upgradation services like we spoke about earlier. Outsourcing cost is a main component that you would typically see. Internet expenses and communication and traveling costs, because that is again higher side in this kind of industry. When we talk about some balance sheet items, what are the major heads and major inclusions that you would see typically in an IT industry is the property, plant and equipment, and intangibles. So in under intangibles, goodwill, you will see a lot of times, because there are a lot of mergers and acquisitions and business combinations in this kind of industry. In-house developed software, acquired software, patents and copyrights. When there are patents and copyrights, it's very important for the auditor to check the ownership of those patents and copyrights. You would typically see buildings and equipments being taken on lease, so the right of use of assets, the lease liabilities corresponding to the ROUs of those assets, and then computer servers, data storage equipment. These are common PPEs that you would typically see in the IT industry. When we talk about investments in securities, definitely to fund short-term gains or to make long-term earnings from investments. Investments in subsidiaries, there are a lot of subsidiaries within the IT companies incorporate in India as well as outside. In trade receivables, there would be a lot of trade receivables from group companies, because there are a lot of related party transactions, which carry a risk of credit impairment, of course. Then in other assets, typically we would see the advances being received, because let's say if the software contract or any other contract, let's say, is for 3 months, right? And there's been an upfront payment for all those 3 months, so there's a lot of advances. Unbilled revenue is one of the key things that we would see in assets. Prepaid expenses, and of course the balance with government authorities, and then the deferred tax part of things. So these are some of the common balance sheet P&L items that we've discussed specific to the IT industries that we would be seeing. Moving on, yes, a very important part is shareholders' equity as well. So, the major shareholders generally are, comprised of promoter group and venture capitalists in startup industries. Under equity, we would see a lot of times share-based payments, employee stock options, stock appreciation rights being, there. In borrowings, specifically when we talk about the startup industry, there are a lot of borrowings. When we talk about even entities ranging from, let's say, 5 to 10 years, they also have a lot of borrowings there. And then of course trade payables and payable to employees, lease liabilities, and etc. So now moving on to substantive considerations. We've spoken about the the risks and certain important things that we see in the financial statements. Now moving on to what are the specific substantive procedures when we talk about the IT industry, right? So I want to start by showing some revenue models of the companies in the IT space. So revenue from generally from software industries depends on the arrangement with the customers. You would typically see these 6 or 7 billing models coming your way when you are auditing the IT industry. First is the time and material based, right? Under this, the billing is done on the basis of the time spent by the particular individual or the materials that are used. Milestone billing is charged on the basis of achievement of a milestone, right? So which could be, let's say that a company has been engaged to do a long-term project, right? So that company could be doing a milestone billing, which could be at the milestone, let's say, of a feasibility study or the business analysis or the development or the go live stage, right? And it is very important for the auditor to understand that when the entity is recognizing revenue from a milestone billing perspective, the completion of the phase has to be agreed upon by both the parties. A lot of times, I have personally seen that there has been a gap between the understanding of the entity and their client regarding the achievement of a particular milestone, right? So in that case, it becomes important to understand what is the correct milestone that has been achieved, what till what percentage of completion the revenue has to be recorded. Product license sale. Now, this is also very important because in under the IT industry, there are a lot of licensed softwares, which are recognized at a point in time at the inception of the arrangement when control transfers to the client. So typically, product license sale are recognized when when the license has actually been handed over to the client. Support and subscription. So revenue from support and subscription after the the software has been provided to the client. There is a support and subscription revenue that is recognized over a contract term on a straight line basis, as the company is actually providing a service of standing ready to provide support. So that's what they call in the term standing ready to provide support. So when and if needed. So it's not that you would typically see that these support services are being provided, let's say monthly, quarterly, etc. It's as and when. So it's because the entity has to be always ready to be providing support whenever needed. It is recognized over the contract term. It could be another billing model, could be outcome based pricing, right? Under this, the service provider charges based on the outcomes that are realized by the customer. Transaction volume based pricing. It is this again is a very prevalent billing model that sometimes, let's say that there are many IT companies who are these days offering proctoring services for examinations, right? So there could be saying that, okay, we are going to charge X amount of revenue for 50 students, for 500 students, for 5,000 students, or maybe let's say for 5 exams we are going to charge. So that becomes a transaction volume based pricing, right? And then of course a cost plus markup. Many small to mid-sized entities are following this model that under this the billing is done as cost plus markup basis, where certain costs like employee cost, operating expenses are charged from the customer by adding a fixed markup. So these are certain revenue models that typically you would see in the IT space. Now moving on to revenue. Now, this is, I would say, the most critical part of the IT industry, because the standard is vast, right? Comprehending the India's 115 standard is not an easy task. And the IT industry operates, like we've discussed earlier, on multiple model basis. There is no fixed model of revenue, there is no fixed model of billing. So it becomes very critical from that audit standpoint to have a very in-depth knowledge, at least for the technological part of the India's 115, and the guidances that have been issued by various firms in this regard. So starting with the audit procedures in revenue, firstly, obtain the contracts entered by the entity with its various customers, and understand the key terms of the contract. Now, in this type of industry, there is not just one contract. My experience has been that there is one master service agreement which lays down the broad terms of the contract. Then there are multiple SOW, statement of works. So the auditor should not just rely on the MSA. They should also go to the SOW level to see actually what is the scope of work, what was decided to be provided in what time frame, etc. So it is very important to understand both these things in conjunction with each other, right? Identifying the model of revenue followed by the entity, right? That is, like we discussed, if it's a per user basis, per transaction basis, single month, or a multi-year contract. So the model of revenue becomes very important. Let's say, because for example, if it's a multi-year contract, right, with escalation in prices each year. However, the performance obligation that is actually being provided to the entity is kind of the same, with no change. So there it becomes important. India's 115 is a little silent. It becomes important to see the series guidance that has been issued, which says that in multi-year contracts with escalations, we have to prorate the entire revenue over the contract term. Similarly, for per user basis, it is very important to understand at what time is actually the control being transferred. That is the time when you will actually be able to book the revenue, right? Then identify the responsible parties under the contract, the performance obligations to be satisfied by the entity, and the transaction price, and understand whether the goods and services supplied by the entities are distinct or capable of being distinct. Now, a very important feature of this industry is performance obligations. There are many services and different services which are actually being bundled together, like we discussed earlier as well. There is a concept of PCS, which is post contract support services, which includes services like updations, maintenance contracts, upgradations of different hardware components, or upgradation of different features, and all those kind of stuff. So generally, IT companies are actually bundling these in a contract and providing specifically, and are charging actually a common price for that. However, the standard actually says that irrespective of whether there is one price charge or not, if they are capable of being distinct, then treat them as distinct. So it becomes very important to understand what are the performance obligations that the company is providing, whether those performance obligations are actually distinct or capable of being distinct, or are being bundled together. A lot of times we see that the hardware and the software are being bundled together and sold. So that again becomes a very important aspect of it. So sometimes companies charge together. Even then, there is a need to evaluate whether they are capable of being distinct or not. Just by seeing that, okay, these 5 performance obligations, that the 5 things have been charged in an invoice, and there's one price that has been charged, does not suffice from an accounting perspective. Similarly, sometimes there is a non-refundable upfront fee generally in these kind of contracts, specifically when you spoke about the license billing part. So if there is a non-refundable upfront fee in this license contract, the standard requires entities to determine whether the upfront fee actually relates to the transfer of a promised good or service. Generally, those upfront fees are just a one-time payments and do not actually entail any transfer of promised good or service. In that case, it has to be treated as an advance payment, correct? So it depends. It is very important in this kind of industry to actually understand. And of course, we cannot discuss in detail each and every aspect of the India's 115 because it will take hours and hours on end to do it. But it is very important to understand the performance obligations. What I'm trying to say here, it is very important to understand the revenue model, what is being charged, what is the transaction price, etc. There is a very strong chance of the auditor encountering a variable transaction price in the contract in cases of post-paid contract. So let's say that there is no fixed number of users, and there are post-paid contracts say that okay, billing will be done basis the number of users that have happened in a quarter, for example. So there is an element of estimating the variable consideration, which is again a complex task. So whatever variable consideration can be estimated need to be booked as revenue. So again, the understanding of the contract, understanding of the standard is very important. Typically, in these service contracts, planning over multiple years, the auditor should place great reliance for testing the deferred revenue and unbilled revenue. Now, this is another important aspect of the IT industry that the revenues are being received altogether. However, we need to understand the computations and check the computations or the schedule that is provided by the management that the deferment of the revenue has been done properly. This is again something which is heavily prevalent in this industry. And if the billing model is done on time and use basis, auditor should perform procedures to ensure the correctness and completeness of the base data used for the billing of the customer. So basically that if, let's say, the billing is being done on hours, number of hours, so it is very important for the auditor to know that the extraction of the number of hours put in, or at least, or even the punching of the number of hours that are being put in a particular project is being done correctly. There are proper controls in place over that. There is proper bifurcation. So if one employee is actually working on 3 projects altogether, so it is very important from an audit perspective to understand how the distinction is being made between different projects. Again, the auditor should assess the risk of going concern. So in this industry, we've seen that in the past, there are a lot of new startups that are coming in, a lot of small scale IT companies that are there, and they do not generally have a lot of customers. So we should, as auditors, properly assess the risk of going concern, because if that one customer loses interest and moves on to some other company, the company is done, right? So it is very important for us to understand the risk of going concern with limited customers and perform gap testing for revenue invoices. This is something that I've hardly seen people doing, that perform a gap testing of revenues invoices to understand any fraudulent invoices or cancelled invoices. So how gap testing is generally done is basically we obtain the entire list of invoices that have been issued during the year. We properly check that has there been any gap between the invoice numbers, and 9 out of 10 times I can assure you will find gaps in the invoices. And if that's the situation, you have to go back to the management and ask them, inquire them about the gaps. It could be a plain case of, let's say, cancelled invoices, that's fine. But we cannot generally just rely, okay, that there is a gap, so it's a gap. We have to go back and understand that why is there a gap between the issued invoices. Moving on to substantive procedures regarding the operating expenditures, right, and operating costs. So the audit procedures, excuse me. The audit, the audit procedures on cost element should focus on ensuring the completeness of such costs are there, specifically, like I mentioned, when there are cost plus model entities, right? So when the billing is done, to ensure that there is no understatement of revenue, we need to ensure that the entire cost has been completely taken into account while doing the billing, right? So completeness is extremely important in these entities. The auditor should also ensure expenses which are non-recurring or is in the capital nature, like the development of software, should be capitalized and not expensed off. So that is again something very important in this kind of industries which we need to take care of. Now, when we talk about employee benefit expenses, so since IT companies are very employee heavy, right, it is very important for the auditor to do surprise audit checks in the payroll space. For example, in one of the entities, and I've specifically put this example here because we, when we did this procedure, we found out that actually the employee was fictitious. So auditors should do special procedures to ensure that there is existence of employees, because there are so many employees. It is on a test check basis. If we ensure that the employees actually exist, then it becomes, the risk, the acceptable risk goes down to the acceptable level. So we did a calling procedures on sample basis. So that was some kind of a, an unusual procedure that we did, and we actually got to know that the employees were not there, or the employees had moved out of the industry, but because of the controls not being there in place, they were still recognized as the permanent employees of the company. Payroll rationalization procedures are very important in this kind of industry. So how do you do a payroll rationalization procedure? Is basically you build an expectation of the payroll expense that is going to be for the current year, the year that you're auditing, based on the payroll expense that has been there in the previous year. So you take the entire payroll expense of the last year, you divided by the number of employees that were there in the last year, you adjust it in accordance with the new joiners and the leavers that may have happened, and you come out with an expected number for the current year and check whether the current year expense is actually within the range that auditors have built there. So this gives a lot of comfort, basis the different inputs. Typically, these entities have multiple bonuses paid throughout the year. So like I mentioned, incentives, there are a lot of bonuses, monthly bonuses, different kinds of bonuses, retention bonuses, completion of a particular milestone bonus, and a lot of other kinds of bonus. Both the types of bonuses are many, and the the timing of the bonuses are also many, right? So it could be paid throughout the year, it could be paid quarterly, etc. So the auditor should include the bonus incentive as a part of the audit procedure by recomputing on a sample basis. So we should actually, take samples from various levels within the organization and actually check that whether the bonus payout or the provision that has been made in accordance with the bonus policy for applicable to those employees and is also approved properly through the board of, through the board minutes or through the, senior management. Data sent to actuary, again, is a must check. I've spoken this in the previous slides for the auditors, along with carryover leaves from sample employees from the system. So just by obtaining the data sent to the actuary is not enough. We need to test actually the data that is sent to the actuary as well. We need to test the additions during the year. We should test the increment percentage that the actuary is using, that whether that increment percentage actually has been there or not. We have to test the average attrition rate of the industry and a lot of other aspects. Specifically, when we are provisioning for the compensated absences, we should ideally, on a test check basis, also take out the leaves that are actually there in the system which have been gone to the actuary. So of course it's not possible to take out the leaves that are there available to each and every employee, but on a test check basis we should actually do that. And of course, generally IT companies, like we've spoken, offer share-based compensation to employees. So auditor should ensure recognition of such expenses is as per the Ind AS 102 share-based payments, along with evaluating valuation report for data used by the valuer. So again, a very important aspect I want to bring out. From an auditor's perspective, it is not just important to understand, okay, the accounting is done properly. All these auditor experts or the management experts, whatever information they are providing has to be tested by the auditor. The evaluation report in terms, for the fair value of the stock-based compensation is equally critical. The inputs used by the valuer are equally important to be tested. So like many technology companies, use share-based payments as a key component to attract, retain, and motivate employees. Under previously, if I remember correctly, under the Indian GAAP, the accounting was actually primarily driven by the guidance note on accounting for employee share-based payments, which allowed the use of intrinsic value for valuation. However, the new Ind AS 102 mandates that fair value has to be utilized for valuing this employee share-based expense. So because of which the employee cost has also again, become really critical. Sorry, right. Uh, Along with that, it is also important that, when we are talking about share-based payments, it is important to judge the nature of share-based payments, whether it's equity settled, whether it's cash settled, whether it's optionally settled. So each will have a different accounting treatment. Of course, we cannot discuss it in depth here. But for example, like SARs or, cash settled have to be, revalued at each year end, but ESOPs don't. So these are different certain parameters that we need to understand that when we are dealing with such standards. From a PPE perspective, an IT company, will be developing in-house software. You will see that almost in all, major companies that they have intangibles capitalized as in-house software development. It is very important for the auditor to ensure that the expenses are capitalized according to the relevant standard, whether it's research phase or development phase. That's very important, because during the research phase, the entity ideally cannot demonstrate that the intangible assets exist, and that it might generate a probable future economic benefit. There is no guarantee that the research will be successful, so all research costs as per the standard have to be expensed off. Even if as an auditor or as an entity, it's not bifurcatable that okay, this expense is actually research or development. In that case also, all expenses have to be deemed research and expensed off. The costs for the development phase can only be capitalized. That is very important, and that too, the standard lays down a couple of parameters or a couple of pointers against which we have to evaluate the technical feasibility, the intention of the management to complete the intangible asset, the ability to use or sell the asset. So it is very important for an auditor to understand all these aspects, to be clear about what the accounting requirements are, basis which the accounting is being done. Again, impairment assessment. So since the IT industry operates in a nature of highly volatile technological changes, right, it is very important that the auditor must carry out an impairment assessment on the PPE and capitalize intangible assets of the entity, because there is so much of dynamism in the industry. There's so much of technological advancements, changes, software changes. In fact, every 2 years the software is being upgraded, or the technology is being upgraded, that it becomes obsolete for the entity. The taxation again becomes a very important part when we speak about the IT industry. So usually IT companies serve its parent entities situated overseas, so it becomes very important to engage a transfer pricing expert to evaluate whether the entity is doing business with its related parties on an arm's length basis or not, to provide an assurance that the entities are operating on a fair and fair trade basis. So this again should be done by the auditors, because we are not ideally taxation experts. So we consider engaging a taxation specialist in this regard. Generally in the initial stages, tech startups runs with big losses. So the auditor should consider whether the deferred tax asset recognition is in line with the Ind AS or not. The IT Act 1961 also provides benefit in the form of tax holiday period, specifically the exporting softwares from a free trade zone. So that also becomes very important from an audit perspective, to judge that whether the computations of all these holidays or the deferred tax is being done properly. And then again, there may be many tax litigations that the company is involved in. Like I mentioned previously in one of the slides, that we sent a legal confirmation and we found out that there was a litigation. So auditors should obtain proper legal opinion regarding the possible outcomes of such litigations, and evaluate that whether any provisioning is required, whether it should be disclosed under contingent liabilities, or any other disclosure requirement that is there, and involve tax specialist in case if required. When we speak about receivables, it is very important to know that related party transactions, we should the moment related party transactions in this space comes up, the auditor should get alerted immediately that while auditing the recoverability of receivables, just verbal communications with related party is not sufficient. Auditor must ensure a proper confirmation and the personnel providing the confirmation, along with the domain name. So once it happened that, we were kind of, following it up with the entity for a related, for a receivables confirmation, which was from a related party, and the entity was delaying it, and we refused to sign the financials without that confirmation. So suddenly, from at 12 o'clock in the night, we receive an email of the confirmation, and when we see that it's from a gmail.com account. So of course, as an auditor, we are not going to rely on that because it's from a personal account. And when we inquired about it, we understood that there is no such person. From the mail came, there is no such person in the entire organization. So it becomes very important from an auditor to understand these small things as well matters. Not just obtaining okay, we've received a confirmation, okay, take in your confirmation tracker and go. No, assess the confirmation, see for proper signatures, see from who the confirmation is coming in, see from what domain name the confirmation is coming. There are sites which today exist where you can actually test whether the domain name actually exists or not. So invest in those kind of sites, take those portal subscriptions, etc. When we talk about procedures on foreign currency balances, again, IT companies, they generally deal a lot in foreign currency exposures, throughout various geographies. So the auditor should ensure that, the proper reinstatement is there of year-end balances. The auditor must verify that all foreign inward remittance certificates are in order to ensure actual remittances exist. And the auditor should also take into consideration FEMA guidelines or other applicable, laws, guidelines with respect to foreign remittances, and ensure that, the entity has no legal compliance. So generally, we see that the technology companies in India are more exposed to foreign currency, variations, as they, generate a significant revenue from the export of services. So knowing the key provisions of these laws, for example, FEMA, the applicability of, repatriation or remittance of funds within 9 months, 12 months, 15 months, as the case may be. It is very important from an auditor to be mindful of those, laws and regulations while doing the work papers or while testing the relevant areas. Another important aspect is business acquisition, right? So business combinations, again, many facets attached to this standard, a huge standard again, and should be extremely properly evaluated. There are a lot of business acquisitions in this IT space, day in and day out, a lot of mergers, acquisitions, whether it's a business combination, whether it's just an asset acquisition, whether if it's a business combination, whether all inputs, processes, and outputs have been acquired, what are the fair value of the net assets being acquired, how has the fair valuation been done, is there a rollover equity, is there any contingent payments in the contract. So a lot of aspects have to be understood with respect to the standard, with respect to the accounting. So under the IT industry, acquisition of new businesses are very common. Companies build themselves by buying out new emerging entities. There is an inherent risk associated with the business acquisition transaction due to the complexity of accounting. The auditor should consider the technical competence of the team working on the accounting for business acquisition. And in case, there's no harm in actually, involving certain accounting specialists who are actually, in that space, and not the audit space, who are dealing with these standards day in and day out. And finally, I think the going concern assumption. So the new age tech startups are based, as we've discussed, on new business models. They are incurring heavy losses. So it's very important for an auditor to consider whether the projections that. So typically, what is the process of going concern, assessment is that, we as auditors ask first the management for their assessment, right? How have they assessed their going concern assumption? So whatever inputs they give us in that space, it becomes very important for us to test those, be it the projections that they are saying, be it the new contracts that are going to come up. So if the entity is saying that, okay, there are 5 new contracts that we've entered into, so obtain those contracts, see that what are those contracts about, see whether those contracts actually contributing to the stability of the organization or not. So the projections of the growth prepared by the entity should be tested thoroughly. The data and facts used for making such projections are reliable or not. It's not that, okay, some entity has suddenly taken 60% year-on-year growth on their projections. So you need to question why have they taken, what is the rationale behind it. And then the auditor should document clearly in this work paper that, why the auditor believes that the going concern assumption is appropriate. So we've seen a lot of substantive procedures, a lot of key critical areas that are there in the IT industry, the space, and how to go about, how to navigate those areas. So I just want to spend 5 minutes on what are the key audit matters that are there on the IT industries that are being there, right? So, like we spoke about in the earlier slides, if you see Infosys, again a listed entity, what is the key audit matter written there? So the key audit matter was revenue recognition. The company's contracts with customers include contracts with multiple products and services. The company assesses the services promised and identifies distinct performance obligations. This involves determination of the deliverables and the ability of the customer to benefit independently, which requires significant judgment. So like we mentioned that, we have to be judgmental enough to understand what are the different performance obligations. That's exactly what they're trying to say here. In certain integrated services agreement, revenue from third-party vendors, is recorded net of cost when the company is acting as an agent between the customer and the vendor. So generally, these days, a lot of tech companies are just platforms which are linking, parties on both sides. So in that case, whether the entity is actually the IT company that we are auditing is actually acting as a principal or is acting as an agent, because if it's acting as a principal, the revenue has to be recognized on a gross basis. However, if it's acting as an agent, the revenue has to be recognized on a net basis. Similarly, the fixed price maintenance revenue is recognized on a straight line basis or using a percentage of completion method. So all these things are why I brought in is because we've just discussed. So these are the real life scenarios that actually the auditors are bringing out to the attention. What were the audit procedures performed? So the audit procedures related to the identification of distinct performance obligations, the identification of whether the company is acting as a principal or agent. The auditors tested the effectiveness of the controls related to the identification of distinct performance obligations. The auditors selected a sample of contracts and performed the following: obtained and read the contracts in depth for each selection, including master service. Like if you remember the very first few slides, I mentioned that there is a master service agreement along with the SOWs. So I am also seeing this word here for the first time. So this is a real life scenario. So again, if you see the HCL Technologies, the tax position, so the company is required to estimate their income tax liability. There are matters of interpretation in terms of application of laws. The company has material tax positions and litigations that require management to make significant judgment to determine the possible outcomes of uncertain tax positions and litigation. So this is exactly what we were talking about a while earlier, that it is important for an auditor to understand any litigations that are going on in a company, to assess the possible outcomes, what is the disclosure requirement, where does the case stand, whether is there a probable outflow, whether it's a possible outflow. All these things have to be taken into consideration while doing audits. Now moving on to some certain general things about audit documentation, which is very important in today's day and time. Everybody, we all know it generally that what is important in an audit documentation, but I want to again reiterate the importance of it, because as auditors, we have to be extremely thorough with the audit documentation, as detailed as possibly it could be, because there may be a lot of internal quality control reviews that we need to go through, a lot of external quality control reviews. If a lot of you might have heard that there are in US there are PCEOB inspections, there are AICPA inspections. Similarly, in India there could be ICAI inspections, and going forward NFRA inspections. There could be any litigation on the audit firm when the audit documentation needs to be presented, and of course for the audit team to go into the next year, maybe the audit team is changed, so they need to actually have a proper understanding of the documentation that was done and the proper understanding of the client, so it helps there as well. So what are the key factors of documentation? So one is understanding the entity and its environment need to be properly documented. Like I mentioned, everything related to it, the environment and its operating, the laws, the ownership, the governance structure, the key personals, the revenue policies, the loans if they've taken, anything and everything that we obtain as an understanding need to be documented. All your risk assessment procedures performed by the auditor should be documented for each FSA. The risk assessment should be documented properly, that whether the risk of material misstatement for different financial statement areas and different assertions have been identified as high, medium, low, and what is the rationale behind it, what was the inherent risk behind the risk of material misstatement, what was the control risk basis which the risk of material misstatement have been computed. Then the processes related to each significant cycle. So when we are doing the processes, we do a walkthrough, of the critical processes of the companies. So that needs to be documented properly, that whether the controls are operating properly or not. The documentation should also include the controls map against each what could go wrong. So whatever key risks that we have identified during our audit engagement, and we've decided that okay, we will be testing those controls against those risks. So each risk should be mapped against the control or any compensating control for that matter. Documents supporting the understanding of ITGCs of this entity. And responsibility is of the audit team. So it's very important to understand that ITGCs and ITACs are done by the IT experts that are there. However, the end responsibility still has is with the audit team. So when we are actually obtaining the final ITGC ITAC work paper, you please go through the work paper, see if they have actually identified any control deficiencies, understand from them that what have they done to mitigate, understand from the management that this is the control deficiency that has been identified by our IT team. How are we compensating for that? How are we remediating it? What measures are we taking to make sure that this deficiency does not have a prevalent effect on our financial statements? Then the computation and the basis of materiality computations is again important. Who are the users of the financial statements? What are the users that we've judged from a for the company that we are auditing? Why have we taken a particular benchmark? Why have we not taken the other important benchmarks that could have been taken? So all those, if we are increasing materiality, so a lot of times you will see in recurring clients that okay, earlier you took 1.5%, the next year the engagement partner is saying that okay, take 2%, because there have been no significant entries, there have been no significant adjustments in the prior year audit, and there has been no significant changes. So document all those rationales that why has the materiality been increased from the previous year. When we are talking about the working paper should tie out with the financial statements. All your numbers, before you close out your audit files, ensure that the numbers that are there in the working papers are tying out with the final numbers in the financial statements. In case not, prepare a reconciliation. There is a 45-day period given after the the numbers are frozen to close the audit files. Prepare a reconciliation between the final number and the the working paper number. Agreements of major customers should be there in the permanent file, who contribute to the majority of the revenues of the entity. Any other major agreements, lease agreements, ESOP agreements, share-based payments, they should all be there in the permanent file of the entity, so that the people who are auditing next year have reference to them. Any accounting opinion taken by the company or the auditor. So let's say that if we are saying that okay, the useful life of a particular asset is not this year, or the management is saying that year, the management is saying X years, 10 years, but the actual useful life should be, let's say, 8 years. So any opinion that we are taking from a technical standpoint should be there in the files. Any accounting memos should be there, basis which we are assessing the accounting, maybe a revenue memo or maybe a business combination accounting memo. Documentation in support of transactions with related parties which demonstrate the transactions are at arm's length, right? So that's very important. Working of the tax experts. Again, the end responsibility lies with the audit team for any taxation related thing. So it's very important to understand the workings and include them in your documentation. And then finally, the management representation letter signed by the authorized signatory. So I think these are certain important aspects of the audit documentation. I hope and thank you so much everyone for being patient. Please reach out to this email in case you have any other queries, any queries that you want to discuss or connect on LinkedIn. So thank you everybody.
Thank you, Raghav, I think it was an excellent session and very insightful because the flow of the presentation, as I saw along with the participants, is very excellent in terms of that, starting from the industry size and then the domestic industry size and then the global industry size and the potential this industry has, IT industry has in terms of Indian economy, and then taking to the challenges and the scams identified in last decade or so for various IT players, and the challenges faced by the auditors while auditing these companies, as you mentioned in case of Baiju, and then taking it to setting the context of the IT industry and the challenges faced by the auditors and the industry, and thereafter taking it in terms of detailing therein the context, the challenges, and the financial statement caption wise explanation which you brought in, right from the balance sheet captions till the P&L captions, and taking it rightly with the assertions, and then moving it to substantive procedures, documentation. I mean, I think it was quite exhaustive session in terms of this IT industry. So fantastic session, Raghav. I must congratulate you for that, and very insightful. Very
Thank you so
insightful.
much.
And we have received a lot of questions from the participants, and I think we have 13 minutes left in our scheduled time. So we'll try to take as many questions as we can, Raghav, and then maybe the other questions which we could not, we'll try to answer by way of the mail communication to the respective participants, right? Okay, so I'm starting with some of the questions, Raghav. So one is that how to tackle the audit assignment when SAP of client is customized for selected aspects only by the client. So what I could sense out of this question is that they are saying that the company would not have implemented the complete SAP as a accounting software. They would have picked up some modules out of the SAP. So how to tackle the audit assignment where some modules of SAP have been implemented by the company. So that's the question.
Correct. So ideally, from an auditor standpoint, when we are going and auditing a company, it should not matter too much that whether a proper ERP has been implemented or a part of ERP has been implemented. Whatever module has been implemented, try and first gather the understanding of what does that module do, how does that module work from start to end, what is the process flow, walk through the entire process of that entire module, and you will gain a complete understanding, and it will become very easy for you to understand right from the start. So let's say if I talk about only a revenue module that has been built in, and one ERP which has all the right from the customer onboarding till the end invoicing. So understand how a customer is being onboarded, how is the contracts being signed, being uploaded in the system, how is the system picking the the purchase order numbers or the sales key numbers that need to be invoiced. What is the time when the invoicing is being done, what is the time when the dispatching is being done. So when you understand the entire flow of that particular module, it becomes very easy after breaking down each and every step that from an auditor's perspective, that okay, this is being done in this phase, this is being done in this phase. So I think that's the key point when you are dealing with one particular module.
Right. And just to add on this, that if the company has taken for some other software, for example, payroll, they have taken HRMS software. So the auditor can choose to test those softwares in parallel. And if there are any procedures or accounting being done manually or depending upon the IT automated control, so those testing can be done independently. So it can be a combination of specific SAP modules plus some external software other than SAP and the IT dependent manual control testing by the auditor.
Absolutely.
Next question is that whether a non-computer expert can undertake audit of IT even though he is a CA and holding a COP.
Yes, of course. I think it is, from an audit perspective, see, I won't say that you should not try and have knowledge of different things. It is very important, specifically in our profession, to have knowledge of a lot of other aspects, other than auditing. However, it is just not necessary that you have an IT knowledge to audit an IT company. If you are a chartered accountant having a COP, know your audit basics. It is you. I believe this profession gives us enough strength to go in and then understand things. So you can involve, like we mentioned, that you can involve an IT specialist to make you understand stuff. Do your entire process testing, control testing in those environments, and then bring you the information that is being produced by those systems, and you can audit them in your normal way. So like, I don't believe that if you do not have any knowledge of the IT sector, that you can't do an audit. So that's
Right.
not happening.
Thanks, Raghav. And I think if the question, it's not very clear from the question, but if the question is that whether that non-computer expert can undertake the audit of IT systems, so I think you answered the question from the IT industry audit perspective. But if the question was with respect to audit of the IT systems, that I believe then the person, apart from being a CA and holding COP, should also hold the specialized expert qualification, which may be ISA, Information System Auditor, or CISA, so as to enable to certify those audits. So in that case, it would be mandatory for the CA to hold the requisite degree before he can certify or take up the audit of ITGCs.
Absolutely correct.
Right. The next question is, Raghav, that how going concern issue can be addressed during the audit. So I know that you answered this question twice in your presentation, but it would have come before that maybe. So if you can just address that once again.
See, to address the going concern issue, it is very important to understand that where does the entity stand currently, and what are the future prospects of that entity. It has to be delved in a very deep manner, in terms not just of saying that okay, the entity is existing, so it will keep on existing. We need to see a lot of things. We need to see that the revenue flow is maintained. We need to see the cash flow is maintained. We need to understand that the entity has enough capital infusion to take care of the working capital needs, to take care of the other acquisition and procurement needs. We need to understand the litigation standpoint. We need to understand the employee standpoint. We need to understand the key contracts that the companies are about to enter. We need to understand the industry environment. So and this is not just the limited to it. There's just few examples that I have mentioned. So all these to be taken in conjunction to understand that a company is able to be assessed on a going concern assumption basis.
Now, maybe the last question from my side, and then I'll request Pankaj to have some questions with you. Can the auditor consider materiality percentage range as you used in your slide deck? And is it acceptable by the regulator, or is it going to be the estimation of the auditor within that range you used in the presentation?
So the range that I gave is based on the methodology of a few firms that I worked in. Different firms have different audit methodologies. Their percentages can vary. However, the range that I presented in my presentation was a generally accepted practice. However, based on the auditor's judgment, and as I say, the firm's methodology, the percentage can vary.
Okay, thanks. Thanks, Raghav. So over to you, Pankaj, for your questions.
Thanks, Kapil. Really insightful session, Raghav. I really like the way you have presented it up. And then if you're talking about the facts which you have underlined, like especially about the fraud risk assessment through the fraud triangle, especially the things which the management is reconsidering or considering on some aspects relating to opportunity, pressure, and rationalization. These things are really going to happen, and creating a build on the auditor to while doing its audit. And if you talk about the audit procedures, wherever you are talking about impairment assets, taxation, business reorganization, acquisitions, and going concern assumptions, all these things are really, really helpful to understand. And it was very well lined up over there when we were talking about the audit IT. Few questions which has been asked by the audience over here. So the first one of the question is how to verify and document the unbilled revenue. Is it the way that if we are something like some things are going to be done and some things which are planned to be done, but unfortunately the billing are not in that manner which is to be conducted, how to control all those aspects?
Correct. So if I understand this question correctly, sir, it's that how to audit unbilled revenue or how to take care of that it's being properly evaluated with the entity.
Yeah, exactly.
Correct. So basically, first we need to understand what is unbilled revenue, right? So unbilled revenue is an asset for the company, correct? Unbilled revenue is revenue that has not been billed, however, the services have been performed. So first we need to take that part aside. Now, when we are talking about unbilled revenues, there are a lot of methods to tackle this. First is we need to check that there has been a subsequent billing. So subsequent procedures are a very important part to test whether unbilled revenue then has been billed or not. It could be a situation where unbilled revenue is not billed even subsequently, and then a question can be arisen that okay, there was a wrong unbilled revenue being recorded. So subsequent procedures are important for unbilled revenue. Similarly, the reconciliations, with respect to the payments that have been received versus the billing that has been done is also important. So what happens generally is that a form of unbilled revenue is also that let's say that there has been an advance payment and 100 rupees have been received and the billing has done only for 90 rupees. So when you do that reconciliation, you understand that 10 rupees is unbilled, right? So that's how you do it. So the other two main things when you put it, it is also important to understand that proper controls are in place with respect to unbilled revenues, because this is something that can go unnoticed, both from the management side, and if the management has not noticed it, they will not provide you as an information as from an auditor's perspective. So the controls have to be ensured that whenever the compensation or whenever the consideration is being received, it is being properly mapped against what has been invoiced.
Yeah, it's sometimes very helpful when you are doing a particular task, the arrangement and the kind and the level of fees. All these things are need to be equivalently checked according to the stuff that is placed in and fees which has been quoted, whether the entire scope of activities has been covered, not covered, before categorizing into unbilled. And it's really going to help us a lot. But the other question, which is on the similar lines, when we are thinking about billing aspect or the revenue aspect, one question raised by the another participant is, how do we need to plan our audit procedures that IT industry has the practice of overstating the revenues because they want to, again, putting up the same things that they want to put that opportunity and the pressure and the rationalization all together in these aspects. How as an auditor, these audit procedures is going to help?
So firstly, see, we need to understand that we need to presume the fraud risk in revenue of the overstatement of revenue. Once from a risk assessment standpoint, we have presumed that there is a fraud risk, automatically the procedures have to be elaborate in terms to assess those risks, right? Now, when we are talking about overstatement of revenue, we need to understand the cutoff procedures are a very important part to understand that. Generally, what happens is that towards the period end, like I spoke somewhere in the middle of my presentation, that both the period that we are auditing, the period towards the period end and the next year's period starting is very important to understand that the revenue has been bifurcated properly, because that is where generally the entities are actually playing with overstatement and understatement of revenues. So that is there. Your entire revenue audit process procedures need to be elaborate. It is also important that in case in some entities that if you feel that the risk of overstatement is actually very very high, you can actually also take a different level of materiality only for the revenue area. So that is also permitted by the standards. So you can lower down the materiality, which will include more number of samples for testing, which would include a more elaborate nature, timing and extent of procedures. You can do a lot of analytical procedures around revenue. You can do customer-wise analysis. In fact, you should do customer-wise analysis. You should do, service-wise, product-wise analysis of the revenue. You should do a month-on-month analytical revenue to understand that what months have been extremely fluctuative, and inquire about those aspects as well. So not just limited to these, a lot of other procedures are also there, but these are some key things that we can do to understand and audit revenue in a better manner.
I think that will address the question. One question from my side, that as we are talking about the automation in every direction, be it any part of the organization aspect or accounting or other things, we're talking about audit automation also. What do you think, to what extent can audit automation and artificial intelligence be integrated into the IT audit processes? And what considerations should auditor keep in mind while implementing these technologies?
Correct. So I think one thing is for sure that audit automation is the future of audit, because without automation you cannot bring efficiencies. With the AI coming in, with the other newer technologies coming in, a lot of people think that a lot of audit jobs are going to be lost and a lot of other things are going to be there. My personal belief is that as auditors, if we are up to date with the technicalities of the profession, there is no intelligence or no artificial intelligence that can replace us. One, because the AI cannot take a decision on the accounting position of, let's say, a business combination. The AI cannot take a decision on whether a share-based payment has been properly valued or not valued. So that has to be, it is very important, because generally what I've seen is that as auditors, we are only limited to audit procedures. If we include that little bit of accounting in us, we become a thorough professional, both from an accounting standpoint as an audit standpoint. So that is one thing that will safeguard us from, being falling prey to the artificial intelligence and the newer technologies. We must not be resilient as auditors to implement those newer auditing softwares or newer auditing technologies for our audits, because as I said, they are only going to increase efficiencies. Correct. So I have actually experienced one of the tools, where the sampling for, let's say, 500 samples can actually be done in half an hour. So that's the kind of automation that is coming in. So we don't have to be resilient. However, to hold our values, we have to know that what what is our USP, and we have to maintain.
Exactly. Very well said that the human brains cannot be replaced by the technology, and it's us, if we are fully updated with all those aspects, definitely we will be going to cover up all those audit procedures in our mind while taking up any assignments. I really thank you. There are plenty of questions, but I know we are running short of time. I thank you for your expertise and thoughtful responses to the auditor's questions. And I now hand it over back to NLG and the team to give a proper formal vote of thanks. Again, thank you so much for your time and this very insightful session.
Thank you so much.
Thank you so much, Pankaj. On behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountants of India, I extend my heartiest thanks towards all of you, especially C. Raghav Singhal ji for sparing his valuable time, as well as for such a wonderful, knowledgeable, and very, very, very interesting deliberation on this sector. You have covered all the aspects, as Kapil ji and Pankaj ji has already mentioned. You have covered all the aspects relating to this sector, and thank you so much on behalf of AASB of ICI. In spite of having your busy schedule, you have given your kind consent कि चलो अनिल सर ने फोन किया है तो जरूर करते हैं, बट वो कैंसिल होने वाला था, बट सर ने मैंने रिक्वेस्ट करी, सर ने कहा नहीं ओके करते हैं. इन स्पाइट ऑफ हैविंग so many meetings, you have given your kind consent. So thank you so much from the core of my heart for your expert advice as well as expert knowledge shared with all our members. And I also thanks from the core of my heart both the learned and respected moderators of the day, CA Shri Kapil Kedar ji and CA Pankaj Aneja ji, for again their precious time, precious expertise, precious inputs during the moderation of the webinar, as well as during the question answer session, as well as at the beginning of the session. So thank you so much, Kapil ji, and thank you so much, Pankaj ji. Thank you so much, Raghav ji, and I also thanks all the participants of today's webinar who have joined today. Thank you so much. Thank you.
Thank you.
Thank you so much.
Thank you. Thank you.
Pleasure is ours. Thank you. Bye.
Thank you. Same here. Bye.